Good evening, my good friends. This is Marcos here for another YouTube video. Today is December 11th. It's currently 8:30 p.m. The market's closed up to Monday, December 14th. Let's jump into my Robinhood account here. These last 2 days been a little harsh on the market. There's been a downtrend, especially in the EV sector, and the spec sector been kind of getting hit pretty hard. I'm currently sitting at $4,998.76. For the day, I was down $106.43, 2%. And after hours, where I gained back $18.50. For the week, I was currently sitting at $30, which is 0.62% up. For the month, $2,278, which is 83% up. Like I've said in my previous videos, I was down over $2,700 in this account. I made most of it back. For the 3-month period, I'm sitting at $213, which is a 4.46% increase. I basically made my money back between around Thanksgiving to the current date. Like the last month, like it says here, this is where I made my money back, but I was basically losing $2,700, over $2,700 in this account. Year to date, I'm still losing $461.69, which is 8.46% of my portfolio. All-time high and 1 year is the same because I've only had this account since March. I made a lot of changes. I don't have a lot of stocks anymore. I don't have a lot of options currently. I got 2 of them expiring on the 18th, which is Nikola and FBM. I bought a new put today for Disney. For my break-even price would be $156.68 and or lower. If Disney falls down by December 31st to $156.68 or lower, I'll start making money. I'm currently losing $5. Why I did this put? Because Disney basically shot up today like 20%. If we go over here to the stock Disney, it says right here, today they went up 21% because they have over 83 million subscribers to Disney Plus. Obviously, that's a good thing. I don't have nothing against Disney. I like Disney as the company they are. Now they're becoming a streaming company, not just a theme park company. I will buy Disney shares in the future. I just did this because normally when stocks shoot up so much, a lot of times they come back down to the price they were hovering before. If we look here, Disney was always around the 153 range, between the 154, 155 range or something like that. And it just shot up all the way to the 170, 175, 177 area, and it's currently sitting at 174. So I'm hoping maybe after all this hype that came in of all the subscribers they did and all that, the price will come back down to 154 and I can start making money on my put. I'm not saying that Disney's going to go bankrupt or nothing. I'm just trying to make some extra money on this put. That's what I'm doing. And if this put reaches, let's say, around $50, I'm going to sell it forward. And like this, I will only lose like 30% of my money. It's a risky gamble, but if it pays off, well, I'll make some extra money for the week. My other call options and my put options are expiring in January 2021, and I got forward in 2022, sorry. I currently hold 2 Oxy puts. Why I got 2 Oxy Petroleum puts? One, currently my break-even price on this one will be $13.93. And the other one would be, my break-even would be $10.85. And both of these expire basically next year. I have these puts because Tesla is going into the S&P 500. And once they mentioned that Tesla was going to go into the S&P 500, well, I just bought those puts because what's going on with the oil sector currently, that it's falling, and Oxy Petroleum has been on basically losing money basically the last 3 to 4 years. So they've been on a losing streak. So I thought maybe the S&P 500 would be bumping Oxy Petroleum out the S&P 500, so that should have made the price fall. We currently looking at the Tesla price is $607. Tesla will be already officially in the ETFs and in the S&P 500 on December 21st of this month, of this year. The price on December 18th, any price that closes on December 18th of this year, that's the price that the ETFs and the S&P 500 basically are going to add Tesla to their accounts. So by then, between Monday the 14th to Friday the 18th, this Tesla stock could jump up a good amount of money. It could go up an extra 25% or more, or it could stay the same, or it could dip. But now, once the ETFs and the S&P 500 has to add this to their accounts, obviously they have to buy a certain amount of shares of Tesla. So that's going to create some sort of a squeeze on the market on Tesla. So these ETFs have to buy Tesla because they have to add it to their accounts. Tesla basically, it was a high today was $623.97. It opened at $615 with 62 cents, and the lows were $596.60. Currently sitting at $607.54. During the week, they did dip some, somewhere around here to the low 500s, 580, 70s, 586. Over here, they dipped over here 590, 91. So they had some dips. So whoever wanted to jump in, maybe that should have been your time to jump into Tesla. To get maybe some shares before December 18th. Because that by December 18th, the price will probably go up another 25+%. I am not a financial advisor. This is just for entertainment, and this is just my opinion. What I'm saying about Tesla. Now, Tesla will be going into the S&P 500 through the S&P 100. So what they did, that they bumped out, instead of just eliminating Oxy Petroleum, my personal opinion, I think they should have eliminated completely Oxy Petroleum out of the S&P 500 completely. But they didn't. What they did was push it down to the S&P 500 out of the S&P 100. So Tesla will be going into the S&P 100. And Oxy Petroleum will be going into the S&P 500. And the stock that was pushed out, it's AIV. This stock will be falling out the S&P 500 completely. Apartment Investment and Management. They're currently sitting at $38.80. After market, they dropped to 4.39%. They've been sitting like this basically at this price range. Before what was on, they were around the 50 range, 53 range, $54 range. And then in March, they fell all the way down to the $25 range for over 50%. And then they went back up and they started hovering around the 30s. 40s, 30s, 40s, 30s, basically all the time, 30s, and got another dip over here November 4th. And then they just shot back up to $40 in December. And this last week they shot up, and then they started reestablishing and going back down again, dipping again down to the low 40s. And today they just did a drop about $38. My personal opinion, I think they might fall more, because this is a REIT company. They do a lot of property management. They rent out properties and they own properties. So they'll probably dip more, because now that these ETFs that have this account, AIV in their accounts, they're going to start dropping AIV. They're going to start selling the shares they have in AIV. The S&P 500 also is going to do the same thing. So this price will probably be going down next week. So if you're interested in this REIT, it'll probably be the time now to jump in it. Always do your research on any company you're going to buy. Do your homework to see if this company is worth it and what you're looking for to hold long term. Because normally REITs are for long-term holding because they pay back dividend. So we're gonna go over here to my Safari. I was doing some research on this company and the news where it says that about AIV was going to be pushed out. Tesla's arrival on the S&P 500 pushes out apartment REIT. This is from December 11th at 5:17 p.m., which is today. It says here S&P Dow Jones indicates said it will remove apartment investment and management code from its benchmark index to make way for the electric vehicle maker Tesla. The announcement caps the long-awaited addition of the automaker as investors around the world plan for the S&P 500 index changes to take effect on December 21st. So this is from Bloomberg News. If you want, you could go over it. You could go look into it, Google it, and it'll come out the information. I have some other pages here that I was looking into it. This is from Barnes. It says it right here. This is part of the news here. Tesla is joining the S&P 500. This stock is coming out. Obviously, this is from today also, December 11th at 6:23 p.m. Investors have known for a while that Tesla is going into the S&P 500 on December 21st. But what company would come out to make room wasn't clear. So nobody knew that this company was going to come out up to today. The S&P Index Committee provided the answer. Apartment Investment and Management, ticker AIV, on Friday evening as it disclosed changes to the market benchmark as part of the regulatory scheduled quarterly rebalancing. A second shift is that Tesla will replace Occidental Petroleum, OXY, in the S&P 500. Apartment Investment Management isn't a household name, but it is spinning off Apartment Income REIT in transaction expected to be completed on December 14th. So on December 14th, today, they should be removing Apartment Investment Management Group, this REIT. It turned out to be an easy choice for the S&P committee. Apartment stock was down about 4% in after-hours trading Friday. Occidental stock was off 1.3%. Obviously, this is after-hours trading, so a lot of people do not have access in after-hours, and a lot of people, like brokerage firms, they basically just stop working at 5 p.m. They go to their house, so they do not keep working on the market or nothing. So maybe on Monday, Tuesday, we're going to start seeing the real effect of this decision that Tesla will be going into the S&P 500 and AIV will be falling off. And Oxy Petroleum would be falling from the S&P 100 down to the S&P 500. You can look into this. This is from Burns. You guys could look into it in Google also. You can read over the information what you'll be interested in. Now we're gonna go back over here to my Safari. I googled their website. It's AIMCO. This is their website for AIV. Says it right here. What they do, where they're based out of. If you're interested in a career. It looks like they have nice properties. Look at that. That's in Philadelphia. This is in Redwood City, California. This is in Miami, Florida. So it looks like they have some pretty nice properties. This is in Boulder, Colorado. That's Los Angeles, California. We're going to scroll down to the bottom because like I've told you guys before, when you guys doing researches on company, you can either go through these little lines here where it says the menu. We're going to go to investors. And also if you scroll all the way down, normally it's down here also. We have it right here. It says investors. We're going to see what they provide here. This is the third quarter conference calls that you could click on it and you could hear the whole conference call over the phone, over your radio, or whatever. You click on it, you log into it. Investor relations, apartment and investment management company. AIV is a real estate investment trust REIT that targets geographic diversification in our portfolio in order to optimize risk-adjusted returns and to avoid the risk of due uncertainty in any particular market. So this being said, I'm sorry, my reading ain't 100%. So this being said, that they have different type of market ranges of apartments. They're not just going after the high class tenants. They have everything in between. They have high class, medium class tenants, probably different price ranges like that. If one price range is affected for any reason, well, they have the other price range apartment, the high class, probably covering any losses they might have from, let's say, a lower income properties. We seek to rebalance the portfolio by owning communities that offer apartment homes with a range of prices so as to diversify our exposure to economic downturns and to competitive new building supply. We also seek to own properties with the potential for profitable redevelopment. So basically, they buy properties and they probably redo them to make them more worth more rental income. They just do an upgrade on the properties. It says here the balance sheets. They go over it. Investor kit. And the investor kit here, you got different sectors you could pick. This is the future presentation. We could go through this a little bit here. We could see it. Try to give it a little close up here. We're going to back it up a little bit. Let's see what they have here. We could go up. Table of contents. We got company overview and strategy, investment highlights, financial overview, next steps. So this is on their website. Anybody can log on Google, Safari, and you look into their website. Is AIMCO.com. You just go into the website, look for investors, and this is basically where any company that's traded publicly. You go to investors, and investors, they will hold all the information you need. You were looking for. How much this company makes, how much debt it has, the properties it has right now. We could read through this. This is a lot of information. Right now, there's 33 pages. So you could look at the number of properties. It says here they got 98 properties with over 26,000 units. And basically, they said the revenue is $2,333. It says here, same store average revenue per unit. It says, I'm not sure if maybe each unit it's rented out for $2,330, or is that the average that breaks down for every single unit they have of the 26,000 probably. Maybe some units go for $3,000, some units go for $2,500. So if you break that down between the 26,599 units, it'll give you an average price range of $2,333. So they have here that on 2001, the expected dividend would be $1.72 per share. That's they most likely they pay every 3 quarters. But by the end of the year, for every share you hold from them, which is sitting around $38 currently, you'll get back $1.72. Okay, so we're gonna keep going down here, see what else they have. Invest only in stable apartment communities. This is highlights. I was looking at this earlier. There's a sector of the properties they have, and I saw they have a lot of properties in different areas. And the properties, they have pictures of some of the properties, and they're really nice properties. It says here in the Bay Area, they have 8 properties. Is a Class B property. Los Angeles, Class A property. San Diego, Class B property. In Denver, Class B property. In Philadelphia, Class A. In Miami, Class B plus. In Greater Washington, they have C plus. So I guess they average out their properties by letters, by the grade. So the Los Angeles right here, submarket, I guess these are the cities and all that. Maybe Washington, D.C., Fairfax, Logan Circle, San Diego. Yeah, these are probably by the state, and they have them by the city of where the properties are at. These are snapshots. It's like the Los Angeles area. You see 2 properties they have there, 4 properties, and it shows it here in the map. Let's get a little closer here. Palacio East Park, La Brea, Villas at Park La Brea. That's down there in downtown Los Angeles. I'm not from that area, so I don't know that much. They got Malibu Canyon there. Look at a nice that property with the pool. Lincoln Place. So, yep. So those are some of the properties they have. DC Metro. These are the DC Metro area. Washington DC area. Here we go. Washington DC area. These are properties they have here. So they got some pretty decent and high neighborhoods, you know, in big cities they have properties. So basically they will always have people to rent out their properties depending on the price range. In Philadelphia they have some nice properties, it looks like here too. San Diego. So this is the investor presentation. If you guys want to see anything about this company, you guys are interested in buying any shares from them, this might be the golden opportunity when all these ETF and start dropping their shares out of this company, because most of the time these ETFs, they have to drop shares of companies that are not in the S&P 500. They cannot have those companies in their ETF, because normally the company that's in the S&P 500 is a 5-star company. You know, it's a very high-ranking company if you get into the S&P 500. This is it looks like when these are the remodels they have done of different properties, the before and after pictures they also have here. Anyway, the management team. This looks like a probably pretty good a REIT to have in your account. You should look into it to see if the price drops more into maybe the low 30s, even in the, you know, the $20 range. That's a golden opportunity. You know, you could jump into it and keep it long term in one of your portfolios. You know, I'm going to be looking into it, maybe adding some shares to mine, to my portfolios to keep them long term. Because this is always good to have a REIT company because they pay high dividends normally. So this is AIV ticker symbol. You can look for them, and the website is AIMCO.com. You can find all the information you need there in the investor presentation area of the company. Let's jump back here into the Robinhood account again. They currently sitting here. I'm already started looking at them at $38.80, and they have a dividend yield of 6.19%. So guys, thank you for your time. Please give me a thumbs up. I'm sorry for having this video so late. I appreciate you guys dedicating some time to me and listening to my seeing and listening to my videos. I appreciate it. Please subscribe to my channel and give me a thumbs up. Have a nice evening, people. Thank you very much.